corporates are becoming more savvy in their routing costs, and they're dictating to the bank the route they want those payments to follow.
Welcome to our masterclass series, Client Challenges and the Art of the Possible in Risk, Compliance and Payments with Acuity, a leading firm in the financial crime compliance and payment space. In this video, Neil Tagg and Jeremy Bowen will be with me from Acuity to talk about the challenges their clients face in the world of interbank payments, particularly around the routing and processing of these types of payments. So Neil, if I can start with you first, could you tell me about the challenges you see in the payment space at the moment?
Hello, Dan. I think from a bank's perspective, the biggest challenge they're facing is the increasing difficulty for them to generate margin out of their payments and transactional business. Mm-hmm. Now, obviously, for most banks, the ability to provide payment services to their customers isn't discretionary, it's mandatory. So they're then faced with strategic decisions as to whether they consider it one of their core business activities, where they provide payment and clearing services for their own customers, but also to other banks, mm-hmm. or whether they decide to take an indirect approach, whereby they access markets and infrastructures via partner banks. Now, in this time of narrowing margins, it's becoming increasingly more important for operational managers to find efficiencies and basically do more with less. At Acuity, we see over 5,000 changes made to payment routing information on a monthly basis. Wow. And banks need to stay up to date with this information in order to carry out an effective payment process. And that's not always that easy for them to do under their own steam.
Okay, and so what's driving that pressure?
There's really, I think, two levers which are being pulled. The first one being the rise of the fintech companies and the increased competition from external parties. Mm-hmm. Second one being the ongoing cost of complying with regulations, particularly the cost of putting some of these ancillary services around the payment process like AML and KYC.
Yep.
Now, in the case of PSD2, we're seeing both levers being pulled at the same time, where banks are being forced to comply with a regulation which is essentially going to make the marketplace even more competitive, specifically by asking them to open up their architecture and their customers' accounts to third-party payment providers.
Okay, and so how are they reacting to that?
We're certainly seeing a lot more collaboration between banks. Mm-hmm. The Global Payments Innovation Initiative is an example of this, where banks are looking to align themselves in terms of SLAs and pricing at a regional level. I think if you're around 10 years prior to the external threat of fintechs, you didn't see this same collaboration because the competition remained from within. So some of the differences you saw in correspondent banking and services could have been used to their competitive advantage. Now we're seeing these external players entering the market. It's really signifying a circling of the wagons within the bank industry to try and help ward off some of this threat.
Okay, I see. Are there any challenges around the speed at which they can actually deliver?
There are. The payments industry is like any other industry where consumers are asking for things to happen quicker mm-hmm. and at less cost. And we're seeing a proliferation of faster payment schemes either being implemented or scoped around the globe. Okay. Now, one of the key characteristics of these particular schemes is the ability for a payment to be confirmed as accepted or rejected when the payment's first initiated. Now, in order for this to happen, they do need to assign a maximum timescale for the payment to pass across from the remitting bank across the infrastructure and onto the beneficiary bank. Now, as we're talking a matter of seconds, there's obviously no way in which a payment can fail automation and a human being actually manually repair that.
Sure.
So what becomes vitally important is that these banks maintain access to repositories of comprehensive and accurate payment information right throughout their payment process.
Okay, that's great, thank you. So Jeremy, if I can turn to you then, how do you think that clients can actually be helped in this? If we talk about the art of the possible, what can actually be done to support banks in this?
Okay. Hello, Dan. From a strategic perspective, when our clients start thinking about the future of their own payment processing, they start to look at the ways of making their internal processes more agile. Mm-hmm. There's a raft of innovation options available out there at the moment. So it's important they build a foundation that can evolve as quickly as they need it to. Okay. Sitting at the heart of this is accurate payment routing information, as Neil mentioned. Without accurate data, they can take on board these new innovations and they're not going to realise the true benefits of those. And we're seeing people starting to take that strategic routing information to be able to make more accurate decisions. Mm-hmm. If they can look at that routing information and identify mutual correspondent relationships and identify local clearing systems, they can really start to drive return on investment on those payments and better meet their client SLAs.
Okay. And so if things go wrong, how big an issue are failed payments for banks?
failed payments, it is a big point. There's always going to be the challenge of reducing failed payments and the costs associated with repairing them.
Yeah.
From a client perspective, we deal with many tier ones and many large finance institutions. And you can be enjoying a 98% straight-through processing rate, an STP rate, and still get approximately 15,000 broken payments every day that need to be repaired. Okay. If you can integrate automated information in there, such as APIs and such as payment files, you really do have the opportunity to start to decrease those payments. So there's the secondary point as well, that from the broken payment perspective, there's a big improvements that can be made when those clients are passing those payments directly. There's a big movement at the moment to take the validation point away from the internal process of the bank and push it onto those front-end submission channels that the clients are using. For example, like internet banking at home for a consumer. By doing that, it pushes the onus of responsibility onto the end user to have accurate data. And there are significant improvements that the banks are making of not having to repair those payments deep in their own system.
Okay.
We work with a couple of clients, we work with clients who have adopted both of these processes, and they're enjoying improvements of up to 15% on their processing costs.
So Neil, what sort of pressure are corporates putting upon the banks then?
Well, they're putting a lot of pressure on banks. At Acuity, our work with corporates is really intensifying. We're seeing a trend from corporates wanting to centralise their treasury functions. We're also seeing them want to centralise some of their operational functions through shared service centres. Beyond that, they're wishing to adopt the ISO 20022 standard on a global scale, not just throughout the SEPA region where it's first mandated. Now, this presents a challenge for the banks because they need to be able to accept this messaging standard, otherwise they risk losing the business to some of their competitors. But even if they can, it's still an awkward position because essentially they're making their customers' payments business less sticky.
Okay. And Jeremy, how do you see that pressure being relieved?
Well, as we touched on earlier, with the banks now pushing those payment validations out to the end user, it's never been more important for a corporate and an end user to have accurate payment information they can include within their payments as they remit it. If you're a large corporate and you're putting many thousands of payments, if they fail as soon as they hit the bank's gateway, that causes a large issue.
Sure.
As Neil touched on, with the centralisation of corporates putting their payment hubs into global and regional operations, we're seeing clients taking global routing information and automatically feeding that into their ERP systems such as SAP and Oracle, and taking away that need to manually update those data tables.
Okay.
On the back of it, they're able to make more strategic decisions, and the data they're using in the past was very much around the beneficiary bank. It would be things like the BIC and the clearing code. Now we're seeing an emergence in taking SSI information, which previously would be probably classed as being the domain of the bank. It means that the banks are becoming more, or the corporates are becoming more savvy in their routing costs, and they're dictating to the bank the route they want those payments to follow.
That's great. Neil, Jeremy, thank you very much for your time, and thank you for joining us for this masterclass series with Acuity.